There is a Fed meeting this week, but even so, there doesn't seem enough on the data and events calendar that will stop the sharp risk-on rally. Having said that, the risk-on rally is quite advanced at the moment, so some pullback is possible just on its own accord, just due to sentiment. But in terms of data and events, nothing that really should worry us in terms of the market rally. The big event of the week is the Fed decision out Wednesday evening at 8 p.m. Focus will be on what action they take on their various lending programs, and in particular whether they formalize their QE lending program. Remember, they've had a essentially ad hoc QE program up to now. Are they going to formalize it to a set monthly total? And if they do, what assets are they going to buy? So is it going to be treasuries? Are they going to go into mortgage-backed securities? A lot of other technical aspects that could also come out of the Fed meeting. There's been talk of yield curve control, forward guidance, even altering slightly just some of their very, very specialist rates. The more dovish the Fed, the better it is going to be for the Rand and other South African risk assets. That's through the risk channel. Easier Fed, more risk assets will rally. Usually we say the more dovish the Fed, the weaker the dollar would be as well, and so that would help the Rand. But we're in a little strange environment at the moment, because last week when the ECB went ahead and eased its lending program, did more easing than the market expected, the euro actually rallied. So some growth issues rather than just the yield differentials coming into play. This week is also big for the oil markets. OPEC and Russia are trying to finalize an agreement. It's possible they'll reach an agreement over the weekend, but failing that, they've got a formal meeting on Tuesday and Wednesday where they're going to be making some decisions. In general, the oil market's already discounted a lot, so OPEC plus Russia is going to have to do more than extend the production cuts. They're going to have to extend it for longer than 2 months if the oil price is going to rally. World Bank and OECD also released their economic outlooks this week. It'll be interesting just to see how negative they are on the global economic outlook. There's not much on the data front. In fact, it's very light. The only real the data that could really impact or that should get a lot of attention is Friday's US University of Michigan Consumer Confidence Index. That's for June, so it's fairly live. It's going to show us how confidence is bouncing back, particularly after all the good data that we've been having. In South Africa, we get SA and mining production figures. That data is going to cover March, so that will help confirm our view on how the economy performed in the first quarter. But we will also get the mining figures for April, and manufacturing data for the same month may also be out. It's a little unclear from Stats SA. So overall, Fed in focus this week, not much else to bother. The risk rally remains intact, some profit taking potentially coming into play.